Earlier today, we got the latest German growth numbers, and Germany saw its pace of expansion cut in half from what it had been, which seems to fit with a slowdown in the first quarter for European growth overall. The question for everyone is whether this was a fluke or points to something longer term. We welcome now Kristina Hooper, Chief Global Market Strategist at Invesco. So, which is it? Is it a fluke or is it a longer term trend? And welcome.
Oh, thank you. Well, it's neither. It is very much a first quarter slowdown, not that different from the kind of first quarter slowdowns we've experienced in the United States. We can point to a few temporary factors, most notably weather, but my view is that growth will pick up in the second quarter.
And what about the strength of the euro? Is that going to curtail growth?
Only if it gets out of control. I think it's in a place now where growth can certainly continue and get more robust, but certainly if it gets very strong, it could be problematic.
Germany said part of the problem was trade, that's where they were really hurt. What would have caused that?
Well, there are a variety of factors. I think Germany may be looking too narrowly to focus specifically on trade, but there are certainly a lot of concerns about what happens to Germany in a world with the Trump administration in charge of the United States. Much of what was expected and relied upon for years is now uncertain. And what we know about history is that economic policy uncertainty doesn't create an environment where business investment flourishes. And that could be a real problem for Germany because there's so much uncertainty about trade policy.
I want to go back to the point, though, that David mentioned about the strength of the euro, because if you look globally, the stronger the currency, the weaker the inflation readings seem to have been. And that's been one of the conundrums here for the European Central Bank in particular. And I look at some of this data and I look at the wage negotiations for the first quarter, strong in France, similar story for Germany, in fact. So how does the ECB look at what we're seeing here? Do you think they look through Q1 weakness and we hope to see some form of greater pickup in inflation as we push throughout the year?
I think they absolutely have to look through the first quarter's weakness and attribute it to a lot of temporary factors and look more to a global economic environment that's supportive of growth and look to factors specific to the Eurozone, recognizing that there's also a heck of a lot of uncertainty out there right now, which suggests caution.
I want to move on and talk to you about what you call the potential Frankenstein's monster
Exactly.
of the Eurozone.
We can look well past the first quarter on this one. This is going well into the future.
Ahead.
Yeah.
Italy. What do you make of this? Frankenstein monster is, a pretty punchy phrase.
Well, we are in a very unique situation in that we have two populist movements that have been conjoined with very different interests. We've got the League from the North that is very focused on cutting corporate taxes, which would, of course, curtail government revenue. At the same time, we've got the Five-Star Movement that is very focused on providing some level of basic income to poorer Italians. So that combination can be quite disastrous and can blow through covenants with the European Union.
And why is it particularly disastrous? Because I have to say, if you talk about a government that wants to cut taxes and spend more money, it sounds like something has been going on in Washington. We've seen this before.
But Washington has no covenant with a larger body. And Italy could potentially get to the point where it's taking on an awful lot of debt. It's also going to be very difficult to service that debt in a rising rate environment. So certainly that's not a huge concern right away for Italy. It's a bigger concern, of course, for the United States, but it's still there, and it doesn't make for a pretty picture.
Kristina, you mentioned earlier concerns about the Trump administration in charge of trade. Let's turn to that subject, because Wilbur Ross, the Secretary of Commerce, actually was in Washington yesterday giving a speech, and he explained once again what their position is on trade.
The United States is the most open and the most exploited market in the world. Both China and Europe eloquently espouse free trade rhetoric, but in actual practice are far more protectionist than the United States.
So, Kristina, what are the chances that he is A, right, but B, fixing the problem will really hurt economic growth?
He's not wrong. Some of his points that he's made are absolutely right. But you have to pick your battles. And from my perspective, if I were leading the trade delegation with the Trump administration, I would focus primarily on intellectual property violations, because those really strike at the core of business and the future of U.S. business, I would be far less focused on the trade deficit, which is to a certain extent to be expected for an economy like the United States. Muddying those issues creates a lot of confusion. The Cato Institute put out a really good piece a few weeks ago on this topic and suggested that if the administration is very serious, it really should pursue this through the WTO as opposed to applying tariffs and creating an environment where we could have something like a trade war.
I mean, you could argue at this point now that the WTO is kind of irrelevant. They're going to go their own way. What's the probability that actually they muddle through and we end up in a better position in taking out some of the asymmetry that you allude to, that Wilbur Ross is right. There is an asymmetry in this relationship, and actually it could be evened up a bit to the benefit of not just the United States, but perhaps to Europe when they're trading with China too.
There's certainly the possibility that this gets better. I would say that the chances of this situation getting better improve if we prioritize trade violations and what our issues are. But when we confuse those and make it seem as though a trade deficit is just as important as intellectual property violations, I think we're going down the wrong path.